Imagine the market is almost alive, like it's waiting for you to make a mistake. You take trades you didn't plan. You risk money you promised to protect. You chase moves you already know are gone. And then a question hits you. If I know this trade is wrong, why am I still doing it? Every trader encounters the strange moment where they can feel the mistake before they make it. A moment where your body reacts before your strategy does. Your chest tightens, your hand slows down, your mind whispers a warning. Something inside you knows the next trade is unnecessary, risky, or completely out of plan. But the click still happens. You execute, you enter, you break your own rules. And the confusing part is, you don't know why. It feels irrational, but also strangely automatic. This is the hidden force behind overtrading, a force most traders never identify clearly, yet it controls them more than any indicator on their chart. Overtrading is not a technical flaw. It's not caused by lack of discipline, lack of skill, or lack of market knowledge. It has nothing to do with whether your analysis is clean or messy. Overtrading is a psychological survival response built by your brain to escape internal discomfort. This is why traders who know the right rules still break them. This is why traders who understand risk still ignore it. This is why traders who want consistency still sabotage themselves. Your mind pushes you to trade not because the setup is valid, but because the emotional pressure inside you becomes too intense to sit with. Waiting feels stressful. Silence feels threatening. Stillness feels unsafe. The brain searches for an outlet, and the easiest outlet is the next trade. Overtrading becomes a way to avoid feelings you don't want to face: uncertainty, boredom, self-doubt, fear of missing out, fear of failure, fear of being behind, fear of not progressing fast enough. Every impulsive trade becomes a quick escape from those emotions, not a strategic action, an emotional reaction. Some traders overtrade because the market feels like a battlefield, and they think constant activity equals progress. They convince themselves that more trades equal more opportunities, even when the opposite is true. Others overtrade because being flat, being out of the market, feels uncomfortable. They feel invisible. They feel stuck. They feel like everyone else is making progress while they're waiting. For these traders, silence becomes the enemy. Stillness becomes a threat. The chart becomes a place to prove something, that they're capable, that they're improving, that they're close to success. But they can catch just one more move. But beneath all of this sits one deeper truth. When a trader overtrades, they are not fighting the market. They are fighting themselves. Overtrading is the mind's attempt to quickly remove whatever emotion feels unbearable in the moment. The discomfort of waiting pushes you into the next candle. The discomfort of uncertainty pushes you to act before clarity forms. The discomfort of self-doubt makes you take trades that give you temporary confidence. The discomfort of boredom makes you create setups that don't exist. And the discomfort of feeling not good enough makes you chase wins that prove your worth, even when the market conditions don't support the trade. This is why overtrading feels almost involuntary. You aren't trading because you see an opportunity. You're trading because you want relief. You want relief from the noise in your head, relief from the fear of missing out, relief from the anxiety of waiting, relief from the pressure of wanting to succeed faster. And here's the truth most traders never hear. You don't overtrade because the chart tempts you. You overtrade because the silence inside you becomes too loud. When you understand this, everything changes. You stop blaming your strategy and start examining your inner triggers. You stop believing the market is the problem and start recognizing your own reactions. You stop thinking you need more knowledge and start realizing you need more emotional awareness. This roadmap will reveal the real psychological structure behind overtrading. Layer by layer, you will understand why your brain chooses impulse over logic, why emotions override experience, and why destructive behaviors repeat even when you know exactly how much they cost you. The purpose is not to judge the behavior, but to understand it so deeply that it loses its power. Because once you understand how overtrading truly works, it becomes impossible to fall for it the same way again. You begin to see the patterns before they happen. You start to recognize the emotional waves that normally push you into bad trades. You feel the pressure rising, but instead of reacting, you observe it. Your decisions shift from emotional to intentional. By the end of this roadmap, overtrading will no longer feel like a mysterious force that sabotages you. It will feel like a psychological pattern you can finally see clearly, a pattern you can manage, break, and eventually outgrow. When that clarity arrives, it feels like a light turning on in a room you've been sitting in for years. The room didn't change. The walls didn't move. The danger wasn't real. You simply couldn't see what was controlling you. And once you see it, you never go back to the trader you were before. Most traders believe that overtrading happens because they lack discipline, but the truth is far more uncomfortable. Your brain is designed to push you into unnecessary trades, even when your logic clearly says no. This is not weakness, not foolishness, and not a failure of strategy. It is biology interfering with decision-making in real time. When you watch a fast market, when a candle suddenly breaks a level, or when your chart starts moving with intensity, your brain reacts long before your reasoning does. A chemical called dopamine floods your system. It is the same chemical responsible for cravings, habits, addictions, and repeated behavior loops. This dopamine hit forms a predictable cycle that traps traders without them noticing. The expectation of profit creates the first spike. The moment you imagine the possibility of winning, before you even click the button, your brain rewards you. When you enter the trade, the next spike hits. Even if the trade is impulsive, unplanned, or poorly timed, your brain marks the action itself as rewarding. And the strangest part is what happens during losing trades. Even when the trade goes against you, even when it hits a drawdown, the brain still rewards you for the attempt. The brain is not built to reward strategic accuracy, it rewards action. This explains why traders often say, "I don't even know why I entered that trade." They are describing a biological reaction happening faster than their conscious awareness. Overtrading is not an issue of discipline. It is a chemical event. This chemical rush doesn't stop at dopamine. The moment the chart becomes unpredictable, during news releases, sudden spikes, breakouts, or confusing price movement, another chemical takes control: adrenaline. Adrenaline sharpens your attention but weakens your judgment. It pushes you to act fast, act aggressively, and act emotionally. With dopamine pulling you toward action and adrenaline pushing you toward urgency, the market becomes a perfect environment for impulsive behavior. This is why traders begin to chase price, enter early, rush entries, double positions, revenge trade, abandon their plan, or take trades in every direction. The brain becomes hooked on the emotional stimulation of trading, not the logical process behind it. At this point, trading no longer feels like a professional activity. It becomes emotional gambling disguised as analysis. Charts become triggers. Volatility becomes excitement. Fast movement becomes temptation. And your mind builds the illusion that something important is happening every few seconds. You tell yourself you're reacting to opportunity, but the truth is you're reacting to chemicals. Here's the curiosity that traders rarely consider. Why does your brain treat waiting as pain, but treats random entries as relief? The answer lies in how the brain processes uncertainty. Uncertainty activates discomfort centers in the mind. Waiting for a setup, waiting for confirmation, waiting for clarity. This creates emotional pressure the brain views as a threat. Sitting still requires mental energy. Not acting feels like danger. Your brain wants release, and the easiest release is action. For the brain, the act of clicking buy or sell removes the discomfort of waiting, even if the trade is irrational. This is why overtrading feels relieving in the moment, but destructive afterward. The brain hates uncertainty more than it hates losing. A loss is concrete. A loss is final. A loss is mentally easier to process than uncertainty. That's why many traders prefer taking multiple unnecessary trades rather than tolerating long periods of silence. It's also why many traders keep trading even after winning. They are riding the dopamine wave produced by the win, not the logic of their system. Professional traders understand this deeply. They know that success has less to do with mastering strategy and more to do with mastering biology. Strategy tells you what to do. Biology pushes you to do something else. Professionals build structures that protect them from their own impulses because they understand the power of the chemicals they're dealing with. They remove unnecessary stimuli. They avoid excessive chart watching. They use slow, deliberate processes. They limit exposure to volatility when their mind aren't stable. They recognize when dopamine is pushing them and when adrenaline is controlling them. They do not fight their biology with willpower. They design an environment where biology loses its influence. Because the truth is simple: if you don't master your brain will master your trading. And that battle is won not through discipline, but through awareness. Once you understand exactly how your brain manipulates your decisions, every impulsive urge becomes easier to recognize. Overtrading no longer feels mysterious. It becomes a pattern you can identify, interrupt, and eventually dismantle. The market will always try to activate your instincts, but once you know the internal process, you no longer fall into it blindly. You see the chemicals behind the urge. You see the biological push hiding behind the opportunity. You make space between the impulse and the action. And that space is where the real trader appears, not the biological one, but the strategic one. Every trader wants to believe they overtrade because they saw a potential setup, or sensed an opportunity others missed. Still, the truth is far more uncomfortable. Overtrading rarely comes from confidence. It comes from emotional pressure that disguises itself as logic. What feels like intuition is often anxiety. What feels like an opportunity is often an impulse. What feels like analysis is often emotional noise. The real triggers behind overtrading are not the charts, the market, the strategy, or the conditions. They are internal forces: fear, ego, boredom, and restlessness, pushing you toward decisions your rational mind would never approve. The first and most common trigger is the fear of missing out. FOMO does not show up as panic, it shows up as urgency. You see a move forming, a candle accelerates, a breakup begins, a trend suddenly gains strength, and inside you, a quiet voice says you are falling behind. Even if the move has nothing to do with your plan, even if the entry is late, even if the structure makes no sense, your brain convinces you that this is the one you shouldn't miss. The irony is simple. Missing random moves does nothing to your long-term progress, but missing your validated setup affects everything. Yet your emotions don't care about logic. FOMO convinces you that being out of the market is a threat, as if every candle you skip weakens your chances of success. This illusion makes traders take trades out of urgency instead of clarity. The second emotional trigger is the fear of being wrong, and strangely, this fear makes traders take more trades, not fewer. After a loss, something shifts inside you. A part of your identity feels attacked. You start believing you need another trade to prove your skill. You start seeking confirmation that you still understand the market. You want to erase the mistake quickly, not through patience but through action. Every new trade becomes an attempt to restore your self-image rather than to execute your plan. This creates a loop where the more wrong you feel, the more aggressively you trade. The third trigger, the ego, is even more destructive because it hides itself behind confidence. The ego hates losing. It hates waiting. It hates any situation where it feels small, uncertain, or exposed. The ego doesn't care about your account or your rules. It only cares about preserving its illusion of control. When you hesitated earlier, the ego pushed you to enter just to avoid feeling weak. When you lost a trade, the ego pushed you to jump back in to avoid looking defeated, even if you're only fighting against your own thoughts. When the chart moves without you, the ego pushes you to chase it because sitting still feels humiliating. You think you're trading to make money, but sometimes you're trading to protect the image your ego holds of you, the trader who must win, must act, must be right, must stay in control. Ego-driven trading feels confident but is actually defensive. The fourth trigger, boredom, is the one that traders underestimate the most because it feels harmless. But boredom in trading is dangerous because it creates the illusion that you must do something to stay productive. When the market is slow, your mind becomes restless. You start staring at candles that barely move. You zoom into smaller time frames for stimulation. Your brain begins searching for patterns that aren't really there. You convince yourself that you see an opportunity simply because you want something to happen. Trading becomes entertainment disguised as work. Overtrading born out of boredom is subtle because it doesn't feel like emotional decision-making. It feels like filling time, but it destroys accounts faster than any other trigger because every action comes from impatience, not logic. The uncomfortable truth is that traders don't overtrade because the market is active. They overtrade because their minds are restless. The real battle is not with volatility, setups, or entries. The battle is with emotional discomfort. When FOMO rises, your mind pushes you into urgency. When the fear of being wrong rises, your mind pushes you into proving yourself. When ego rises, your mind pushes you into protecting your image. When boredom rises, your mind pushes you into creating fake opportunities. These emotions hijack your decisions long before you recognize the shift. They disguise themselves as intuition. They disguise themselves as insight. They disguise themselves as analysis. But when you examine them closely, you see they all share the same purpose: to help you escape uncomfortable feelings. Overtrading is not a strategic error. It is an emotional reaction to inner discomfort that you haven't yet learned to sit with. Master the emotions, and the behavior loses its power. You cannot remove these triggers, but you can become aware of them. And when you are aware, their influence weakens. Clarity returns. Patience becomes possible. Decisions slow down. You begin trading from intention instead of emotion. You stop reacting to urges and start responding to structure. You stop chasing movement and start waiting for alignment. And slowly, the impulses that once controlled you lose their strength because you finally understand the source behind them. Emotional mastery is not a bonus in trading. It is the foundation. Without it, no strategy survives. With it, even simple strategies become powerful. Overtrading ends not when the market changes, but when your relationship with your emotions changes. Once you learn to recognize these triggers in real time, overtrading becomes something you can see coming, something you can understand, and something you can control. There is a point in every trader's journey where they begin to realize something uncomfortable. Overtrading is not a mistake, it is a loop. A repeated, predictable, psychological loop that pulls you in, controls your reactions, and traps you in the same patterns, even when you consciously know better. And the strangest part is that this loop doesn't need logic, it doesn't need confirmation, and it doesn't even need a real opportunity. It only needs one thing: your emotional vulnerability. The loop begins far earlier than most traders notice. It begins the moment something interrupts your mental quiet. Maybe you see a sudden spike on the chart, maybe news creates a violent candle, maybe price moves without you, or maybe nothing is happening at all, and the boredom becomes louder than the price action itself. Whatever the trigger is, it ignites a subtle psychological spark. Your attention sharpens, your senses heighten, your mind starts generating scenarios. You suddenly feel pulled toward the chart, not because your strategy demands it, but because your brain wants stimulation. This is step one, the ignition of the loop. A single external event connects directly with an internal emotional need, and the body responds before the logic does. Step two happens seconds later. The emotional response kicks in, and this is where the trap truly forms. Your heart rate increases. You feel a slight pressure in your chest or stomach, the kind you mistake for intuition, but is actually anticipation. Your mind begins narrowing its focus to one thing: action. You may tell yourself you're analyzing, but your body has already made the decision. The feeling of urgency starts to override your ability to wait. Your brain wants a release, a resolution, a move. And because your emotions are louder than your discipline in this moment, you confuse emotional tension with market opportunity. That is why traders often say, "I don't know why I entered. It just happened." It didn't just happen. It was step 20, taking control. Then comes step 3, the impulse trade. This is where self-justification becomes your internal salesperson. You start giving yourself reasons, not because they are valid, but because your mind needs permission to act. You tell yourself, "It might work. It's moving too fast to miss. I can manage the risk. I'll close early if it goes wrong." You create a list of excuses disguised as logic. In reality, the trade is not about quality, it's about emotional relief. The act of clicking the button gives your mind a sense of control, even if the setup is weak or completely absent. And once you're in the trade, the emotional pressure temporarily releases, which rewards your brain. The loop strengthens. But the relief is short-lived. Step 4 arrives, the immediate regret. The red numbers appear. The drawdown grows. The candle starts breathing in the wrong direction. You feel a rush of uncertainty as the illusion of control collapses. You begin monitoring every tiny tick like it's a personal threat. Your mind starts rewriting the past. "I knew I shouldn't have taken this. Why did I force it? I should have waited." But regret doesn't lead to clarity, it leads to attachment. Now you're in a battle you didn't intend to fight. You're emotionally invested, not financially strategic. You want the trade to turn not because it makes sense, but because you want relief from the discomfort of being wrong. That emotional need transforms step 4 into step 5, the overreaction. This is where the loop tightens. You chase moves. You add more positions. You increase the lot size to make back what you just lost. You flip your bias. You jump into anything that looks like movement. Your trading screen becomes a battlefield, and your decisions become desperate attempts to regain a sense of control that you feel slipping through your fingers. And as the overreaction intensifies, your account begins to suffer. The losses pile up, your emotions spiral, the loop reaches its peak. The aftermath leaves you drained, frustrated, and confused. You promise yourself you won't do it again. You tell yourself you'll wait next time, that you'll be patient, that you'll follow the plan, but the promise only holds until the next trigger appears. Then the loop starts again. This repetitive cycle doesn't happen because you're undisciplined or bad trader. It happens because your brain is wired to seek completion. Humans crave closure. An unresolved emotional state is mentally painful. Overtrading provides micro moments of temporary relief, moments that reward the brain more strongly than patience does. That is why the loop feels so powerful. The trigger creates emotional tension. The tension demands release. The impulse trade becomes the release. The regret creates a new tension. The overreaction seeks another release, and the cycle continues. Breaking the loop isn't about willpower or forcing discipline. It's about understanding that every part of this cycle is emotionally fueled. The more unaware you are of these emotional forces, the stronger the cycle becomes. But once you begin to recognize each step, when you begin to notice the trigger, feel the emotional shift, observe the justification process, anticipate the regret, and expect the overreaction, you start seeing the loop for what it really is, a pattern, not a destiny. Overtrading doesn't stop when the market becomes easier. It stops when the mind becomes quieter. The loop dissolves the moment you stop feeding the emotional tension that drives it. And once you break even one repetition of the cycle, you weaken the grip it has on your behavior. Overtrading feels uncontrollable only because you've been fighting it at the wrong stage, after it already happens. But the real power lies in recognizing its beginning, not reacting to its end. That awareness turns the loop from a trap into a pattern you can dismantle, step by step, trigger by trigger, emotion by emotion. This is how the cycle ends, by seeing it clearly. Every trader reaches a point where they must confront an uncomfortable truth. You trade according to who you believe you are, not according to the strategy you claim to follow. Your self-image shapes your decisions far more than your rules do, and until you understand how deeply identity drives your actions, overtrading will always feel like an unbreakable habit. The problem is not that you lack discipline. The problem is that your trading behavior is aligned with the identity you've built, an identity that subconsciously demands frequent action. The first identity that fuels chronic overtrading is the hustler identity. This is the trader who believes success is a function of effort. You've been conditioned your whole life to think that the harder you work, the more results you get. More hours equal more progress. More action equals more reward. This mindset works in school, in jobs, and in business, but it destroys you in trading. Because in trading, effort does not equal results. Accuracy does. Precision does. Selectivity does. Yet the hustler inside you refuses to sit still. You feel guilty when you're not in a trade. You feel unproductive when the chart is quiet. You equate being flat with being lazy. And so you enter more trades, not because they meet your criteria, but because your identity demands activity. In your mind, doing more feels like achieving more, even though the market punishes this belief every single time. The hustler identity pushes you into the market with a sense of urgency, convincing you that movement equals progress. But in reality, it turns you into a machine that clicks buttons just to feel accomplished, forgetting that the market does not pay you for effort. It pays you for accuracy. Then comes the second identity, the hero identity. This is the trader who wants to be special, the one who wants to catch the top before it reverses, or the bottom before it rallies. You want to be the one who calls the move everyone else missed. You want to be early, predictive, and impressive. You want to be right before anyone else even notices the setup. This identity is rooted in pride and validation. The hero identity is constantly looking for the big win that will prove something, either to yourself or to others. You feel the need to show that you saw it coming, even when the market gave you no real signal. And because you want to be the hero, you begin entering trades based on potential rather than probability. Instead of following your system, you follow your imagination. You chase reversals because they feel legendary. You jump in early because it feels bold. You take unnecessary risks because being right feels more important than trading correctly. The hero identity makes you believe your intuition is superior to discipline. It tricks you into thinking that catching the perfect move is a badge of honor. But the truth is that the market doesn't care about your desire to be impressive. It only cares about your ability to follow a statistically repeatable edge. And while the hero inside you wants one big moment of glory, the market only rewards consistency, not ego. The third identity is the most subtle, but often the most destructive, the scarcity identity. This is the trader who believes opportunities are rare. You think the market doesn't offer enough setups. You believe missing a move is dangerous. You fear that if you don't take this trade, there won't be another. Scarcity makes every candle look meaningful. Every pullback looks like a chance that won't return. Every small movement feels urgent. When you operate from scarcity, you trade emotionally, not strategically. You enter too early because you fear missing out. You take weak setups because you believe strong ones don't come often enough. You chase because you think it's your last chance. The scarcity identity convinces you that opportunities are limited, even though the market generates thousands of setups every month. But to a scarcity-driven trader, one missed setup feels like a threat. And that perception leads directly to overtrading. These three identities, hustler, hero, scarcity, create an internal pressure that forces you into the market, even when your strategy tells you to stay out. You don't overtrade because the chart demands action. You overtrade because your identity does. And here's the twist: most traders never see the market doesn't reward who you think you are. It doesn't reward hustle. It doesn't reward heroism. It doesn't reward fear of missing out. The market only rewards your ability to follow your statistical edge with consistency and patience. The identity you carry into the market is the filter through which every decision passes. If your identity is built around constant action, you will force trades. If your identity is built around pride, you will chase validation. If your identity is built around fear of scarcity, you will grab anything that moves. No strategy can save you from an identity that contradicts your trading goals. That is why traders endlessly search for new systems, new indicators, new confirmations, thinking the problem is technical. But the real problem is internal. You don't need a better strategy. You need a better identity. The identity of a patient trader. The identity of a selective trader. The identity of someone who believes their edge will show up repeatedly. The identity of someone who doesn't need to be in the market all the time to feel worthy, productive, or intelligent. Your trading behavior will always match your internal identity. If you see yourself as someone who needs action, you will chase action. If you see yourself as someone who needs to prove something, you will force predictions. If you see yourself as someone who fears lack, you will react out of urgency. But when you shift your identity into someone who prioritizes accuracy over activity, probability over pride, and consistency over excitement, the urge to overtrade dissolves. Because now your behavior aligns with the trader you intend to be. Overtrading ends not when you change your strategy, but when you change the story you tell yourself about who you are. Identity is the root. Behavior is the outcome. Change the root, and the outcome transforms automatically. Every trader eventually realizes something they wish they had known on day one. The market is engineered to make you believe that movement equals opportunity, even though most movement exists solely to manipulate your attention and trigger your impulses. The market looks alive, dynamic, and full of potential, but this perception is the first and biggest trap. The truth that almost nobody wants to accept is that 95% of everything happening on the chart is meaningless noise, random fluctuations, liquidity sweeps, engineered spikes, shallow pullbacks, micro trends, and deceptive ranges. Only a small percentage of price behavior carries real opportunity, but your brain is not wired to identify that difference. Your brain reacts to movement, not quality. That is why overtrading feels productive even when it destroys your account. When price jumps suddenly, your brain registers urgency. When it spikes, your eyes widen. When it accelerates, your heart rate rises. When candles become aggressive, your body prepares for action. This biological reaction convinces you that something important is happening, even when the chart is doing nothing meaningful. The market uses this against you through the same patterns you keep falling for: sudden spikes that trap both sides, breakouts that fake and reverse, wick manipulation that targets obvious stop placements, small pullbacks that look like entries but lack real direction, micro trends that break the moment you enter, and tight ranges that appear safe until they explode unpredictably. Each of these movements looks tradable. Each carries the illusion of opportunity, but the majority exist for one purpose: to exploit the impulses of impatient traders. The market punishes speed. It punishes emotion. It punishes the belief that more trades equal more profit. Yet your brain tells you the opposite. It interprets fast charts as chances. It interprets quiet charts as failure. It interprets waiting as missed opportunity. This is the psychological trap the market is built upon. The more active the chart appears, the more inactive you must become if you want to survive. Professionals understand this. They know the market is full of noise. They know meaningful moves are rare. They know their edge does not appear every hour. So they sit through silence. They endure boredom. They wait for alignment instead of reacting to motion. They treat the market not as a playground, but as a battlefield where the enemy is chaos disguised as opportunity. Meanwhile, break-even traders behave in the opposite way. They fill silence with trades because silence feels uncomfortable. They chase noise because noise feels important. They react to motion because motion feels like action. They convince themselves that participating in every wave increases their chances of catching something meaningful. But this belief is the exact reason they stay stuck. The curiosity worth sitting with is simple yet deeply unsettling. If professional traders, who understand the market better than anyone, make their money by trading less, why do break-even traders believe they must trade more? The answer lies in perception. The market looks active. Candles are always moving. Price is always shifting. Data is always updating. This constant movement tricks your brain into assuming that opportunity is abundant. But opportunity and movement are not the same. Movement is constant. Opportunity is rare. Break-even traders confuse the two, and that confusion is the engine of overtrading. Because the market appears busy, you believe you should be busy. Because price spikes, you believe you should react. Because charts flash with activity, you believe you are missing something. Every candle becomes a potential entry. Every retracement becomes a possibility. Every breakout becomes a warning. Noise becomes signal simply because your brain hates the idea of being left behind. And once you start acting from fear of missing out rather than probability, the market has already won. The trap continues deeper. Overtrading feels productive because it mimics the behaviors that achieve success in every other area of life. Effort creates reward. Activity creates progress. Hustle creates opportunity. So when the chart is active, you believe you must also be active. When you enter trades constantly, you feel like you're doing the work. When you close trades quickly, you feel engaged. When you take multiple trades per hour, you feel like you're improving. The activity gives you psychological satisfaction, even though it gives you financial damage. The trap is brilliantly designed. The market gives you just enough movement to trigger emotion, but not enough structure to justify a high-quality trade. You are rewarded chemically, not financially. Dopamine responds to action, not to accuracy. So even when you lose, your brain rewards the attempt, pushing you to repeat the mistake. That is why you feel compelled to take trades that make no logical sense. That is why you jump in early, chase moves, open multiple positions, enter after a loss, and treat every small pattern like a major setup. Not because the chart justifies it, but because the market manipulated your psychology into believing that action is required. Professionals avoid this trap because they have learned to disconnect their behavior from market noise. They do not treat every movement as information. They do not treat every spike as urgency. They do not treat every breakout as opportunity. They understand something most traders never learn. The market creates noise to attract liquidity, not to offer trades. And when you react to that noise, you become the liquidity. You become the fuel for the moves generated to target traders just like you. The brutal truth is that the market does not trick you accidentally. It tricks you intentionally, repeatedly, and predictably. The only traders who survive are the ones who stop interpreting motion as meaning. Overtrading ends the moment you realize that your job is not to trade candle movement, it is to wait for statistical alignment. The market wants you to believe that constant involvement equals mastery. But real mastery is the ability to watch chaos without reacting. The market wants you to believe that being flat is failure, but being flat is discipline. The market wants you to believe that every move is important, but almost none of them are. And when you finally accept that truth, overtrading loses its power, because now you see the trap clearly. Movement is noise. Precision is profit. And the market can no longer use motion to manipulate your mind. Every trader eventually reaches the point where they realize something painfully simple yet difficult to accept. You cannot stop overtrading by trying harder. You cannot force yourself to behave better. You cannot overcome emotional impulses through logic, because overtrading is not a logical problem. It is emotional, biological, and environmental. Trying to beat it with discipline is like trying to stop a storm with a piece of paper. It will always overpower you. The real breakthrough comes when you stop fighting yourself and instead redesign the environment you trade in. The first step is creating a permission to trade rule, a rule so simple yet so powerful that it eliminates impulsive entries at the root. You only trade when 3 specific criteria are met, criteria that match your strategy, your edge, and your plan. Not 2 out of 3, not close enough, not maybe. If all 3 conditions are not present, you do not trade. No exceptions, no rationalizations, no emotional loopholes. This single rule forces your brain to verify, confirm, and justify the trade logically instead of emotionally. It removes your ability to act based on impulse because the permission system blocks anything that is not part of your edge. The second breakthrough is using time limits. Your brain behaves better when it has boundaries. Unlimited time equals unlimited impulse. When you restrict your trading hours, your mind becomes calmer, your focus tightens, and your decisions become cleaner. You are no longer staring endlessly at charts, waiting for something to happen. You give yourself structured windows to perform and structured windows to rest. This eliminates the fatigue that pushes you into emotional trades and the boredom that triggers impulsive entries. Then comes one of the most powerful tools traders overlook: delayed execution. Before entering any trade, you wait 30 seconds. Not to analyze more, not to look for more confluence, but simply to let the impulse lose its power. Emotional impulses last seconds, not minutes. If you force the impulse to sit still for 30 seconds, it weakens. Your breathing normalizes. Your thinking returns. The illusion of urgency dissolves. The trade becomes clear, either valid or emotional. Delayed execution does not make you slower, it makes you smarter. The next breakthrough is reducing chart exposure. The longer you stare at the market, the more your brain begins inventing setups that do not exist. Your mind becomes restless. You start seeing opportunity where only noise exists. The chart becomes a canvas where your emotions paint imaginary signals. Overtrading thrives in this environment. By limiting your screen time, you kill the conditions that trigger impulsive trades. You remove the temptation before it has a chance to form. You stop exposing your brain to unnecessary stimulation. Pair this with another critical shift: trading fewer pairs. More pairs equal more noise. More noise equals more temptation. More temptation equals more overtrading. The irony is that traders believe adding more pairs increases opportunity, but it only increases distraction. The best traders master fewer markets deeply, not more markets shallowly. When you cut your pairs down to the few that align with your strategy, you instantly reduce the number of emotional trades because your brain has less chaos to react to. Then comes a technique that separates professionals from amateurs using trade filters. A trade filter is a checklist designed not to confirm entries but to eliminate emotional ones. It is ruthless, unemotional, and unforgiving. It asks questions like, does this trade match my edge? Does it match my environment conditions? Does it meet my timing rules? Am I calm? Am I focused? Am I reacting or analyzing? If any answer signals emotion, the trade is invalid. Trade filters protect you from yourself. They block trades your strategy would never approve of. They kill FOMO. They kill revenge trading. They kill impulsive entries. They remove the emotional fog that causes unnecessary losses. And then there is one of the strongest and simplest tools of all, a daily max trade limit. Once you reach your limit, you stop for the day, no matter what happens. No matter what you think you are missing. No matter how strong the urge becomes. A trade limit prevents spiral days, the days where one emotional trade becomes 5, then 10, then a blown account. A max trade limit protects you from cascading impulses by cutting off your ability to keep feeding the emotional fire. It forces you to respect the edge instead of chasing randomness. The breakthrough in stopping overtrading is not about becoming more disciplined. That approach fails because discipline requires constant energy, and emotions constantly drain that energy. You do not rise to your level of discipline. You fall to the structure of your environment. If your environment is chaotic, you will overtrade. If your chart exposure is endless, you will overtrade. If your rules are vague, you will overtrade. If your trading window is limitless, you will overtrade. If your pairs are excessive, you will overtrade. If your execution is instantaneous, you will overtrade. Stopping overtrading is not about becoming stronger. It is about designing a system that removes the need for strength altogether. The less your emotions are triggered, the fewer impulsive trades you take. The fewer impulsive trades you take, the more your edge can function. The more your edge functions, the more consistency you gain, and that consistency becomes the foundation of the new identity you form, a trader who acts based on structure, not impulse. The breakthrough is realizing that you do not control the market, but you can control the environment in which you interact with it. You do not need more discipline. You need fewer triggers. You do not need more willpower. You need more structure. You do not need to change who you are. You need to change the world you trade inside. Once that environment is engineered correctly, overtrading stops, not because you fought it, but because it no longer has space to survive. Th Tirayas Varampanioing, becoming GHTYPOF Traduado Odues and Intio Overtrade. The real breakthrough in trading happens when you stop trying to control your actions and start upgrading the identity behind those actions. Because the truth is simply you cannot force yourself to act like a disciplined trader if you still think like an impulsive one. Overtrading doesn't die when you learn a new technique, or when you promise yourself you'll do better tomorrow, or when you try to use willpower to resist temptation. Overtrading ends when you no longer recognize yourself in the version of you that needs constant market stimulation. The final stage is about becoming the trader whose natural instincts work for them, not against them. The trader who waits without discomfort. The trader who trades without craving. The trader who can look at a perfect-looking setup and still walk away because something feels off. To reach that level, you must change what your mind values. Most traders unconsciously value action. They crave being on the market. They feel productive when they click. They feel alive when something is open. They feel like they're doing something. That is the mindset that fuels overtrading, action for the sake of emotional relief. Professional traders value something completely different. They don't crave activity, they crave accuracy. They don't chase opportunity, they filter it. They don't feel fear when they miss a move, they feel pride for following their plan. They don't measure success by how many trades they took, They measure success by how well they executed their edge. This difference in internal values is what separates the break-even trader from the profitable one. And that's the core of identity transformation, becoming the trader whose default behavior aligns with consistency. The trader who waits patiently, not because patience is forced, but because patience is natural. The trader who trades selectively, not because they are scared, but because they understand probability. The trader who thinks statistically, not emotionally. The trader who respects risk as a non-negotiable component of survival. The trader who ignores noise because noise has no meaning. The trader who doesn't chase because chasing contradicts their logic. The trader who doesn't force setups because a setup that isn't clear is simply not a setup. The trader who understands opportunity cost deeply, recognizing that every unnecessary trade destroys mental capital, financial capital, and future clarity. The trader who plays the long game because the long game is the only game that works. Overtrading disappears not because you resist it, but because the version of you who needed to overtrade becomes irrelevant, outdated, incompatible with your upgraded identity. You stop fighting your impulses because your impulses evolve. You stop dealing with emotional urges because the emotions themselves no longer push you toward unnecessary action. When your identity changes, your behavior changes automatically. This is why professional traders can sit through hours, days, even weeks of slow movement without losing their mind. It's not superhuman discipline. It's alignment. They only want to trade when the market truly gives them something worth trading. Everything else feels like noise, distraction, wastage. When you reach that identity, overtrading becomes something you simply don't do, like a fitness-focused person who no longer craves junk food. The temptation doesn't disappear through force, it disappears because your values shifted. To evolve into this identity, you must start by redefining what kind of trader you believe you are. Not what you hope to be, not what you plan to be, but what you decide to be. Your new identity becomes simple, clean, and extremely powerful. I only trade when the market gives me something worth trading. This one sentence rewires your psychology because suddenly your standards rise. You stop treating every candle like an opportunity. You stop treating every movement as a signal. You stop believing the market owes you something. You stop acting like you must always be involved. You stop seeing waiting as inactivity and start seeing it as skill. You stop seeing not trading as a failure and start seeing it as mastery. And then something remarkable happens. You begin to detach. You detach from FOMO. You detach from the illusion of missing out. You detach from the belief that more trades equal more progress. You detach from the frantic need for constant involvement. You detach from the emotional identity that once pushed you into reckless decisions. When detachment arrives, clarity follows. When clarity arrives, selectivity becomes natural. When selectivity becomes natural, consistency begins to take shape. Overtrading dies not because you force it out of your life, but because the trader you become simply does not tolerate it. This new identity shapes your thoughts. You think in probabilities, not narratives. It shapes your behavior. You trade with intention, not hunger. It shapes your standards. You accept nothing below your criteria. It shapes your emotions. You no longer panic when you're out of the market. It shapes your decisions. You prioritize longevity over excitement. You evolve into the trader who doesn't need drama, who doesn't need endless action, who doesn't need the illusion of constant productivity. You evolve into a trader who values precision over presence. You evolve into a trader who is calm, patient, deliberate. And the more you embody this identity, the faster overtrading fades from your reality, not because you avoided it, but because you outgrew it. The trader you become determines the results you get. And once your identity is aligned with discipline, accuracy, and patience, every action you take reflects that alignment. Overtrading ends when you transform. Not when you try harder, not when you force yourself. When you transform into the trader who no longer needs to overtrade, the problem dissolves from your life permanently.